welcome to Billionaire. We are recording video on 13th of November. So we'll check Nifty's move for next week and next session. So in last week, we expected Nifty to head towards 18,350. So Nifty has went near that. So let's analyze the Nifty with the help of price action and indicators. Then we'll check Elliott Wave, and after that we'll check the option chain. So before discussing all these, let's check the previous week's analysis. As I said, we were expecting Nifty to head towards 18,350. So that level has been hit. So we also discussed Nifty could make a correction like this. So this is the screenshot, or this is the area from last video where we mentioned that if Nifty breaks 18,064, it could head towards 17,600. Nifty broken 18,064 but gave just 100 points dip and then gave an up move. We also mentioned that Nifty could be compressing within this range, but that didn't happen. So you could say our analysis on 8th November is partly correct and partly wrong. That's the main disadvantage of offline video analysis. Here you can get the levels, but exactly the market may not move like that. So we have to accept that fact and understand the positional view of the Nifty. These are our previous charts. We have a bearish view on the Nifty, and 18,604 is not broken yet. If this is broken, then we'll turn bullish. So if this is broken, then it will go like this. Okay, it might hit 18,800. If it breaks this, 200 points upside more we can expect, or even 19,000 it can hit. But from there it can again pull back downside, mostly towards 17,000, and then it would rally on the upside. We also discussed an upside bullish targets if 18,604 is broken. Until that is not broken, we are not assuming that it is bullish anymore. So if that is broken, it will have a big upside targets. You can watch that video. We discussed the long-term targets of the Nifty as well. I will add the link in above YouTube card. So now this is our wave count, which could be going wrong, and there is a chance of it to be going wrong, since Nifty has came very close to the all-time high. So let's see what happens in next couple of weeks. VIX has fallen towards 15, so it's good for bulls but not good for option buyers. Okay, so hope you are not losing too much money in option buying, because these days VIX is 15, so options won't move much. So these were a couple of previous charts where we were able to forecast the move. Say 16,800 was projected nicely. Then we projected that it would go down here on 8th October and then would go on the higher as Y wave. So these chart pretty much came in line with our analysis. We also forecasted here a move towards 17,900 or 18,000. So these were our previous charts. So let's move and see the indicator based analysis. So in indicator based analysis, last week also we mentioned that after this swing was taken out 18,100, we were expecting Nifty to head towards 18,350 to 300 levels. So those levels were taken out on last session on the Friday. It was huge gap of opening. HDFC and HDFC Bank did miracle again and took Nifty to new highs towards 18,300. So now, as I said in last video also, all indicators are bullish. Aron is at extreme bullish zone, though it has given a leg on the upside. It's still below 30, so we can still consider this as a bullish. RSI is reaching 70 zone, so probably in next 1 or 2 session it will enter the 70 zones and could start the pullback. Okay, so as the VIX is very at extreme positive levels, there is a chance of drop as well. We should remember that. So now the next zone is 18,400 to 18,500 is the next zone that we need to watch for. So as I said, all the moving averages are bullish, and if we can expect the drop, then the first downside level to watch for will be 18,200 to 18,100. Most likely it's the 18,100 where we have seen that there is a big resistance, okay, or big support here now. So if the drop will start, it will reach towards 18,100. So these are the levels based on price action and indicators. As I said, extremely bullish signals on the indicators, and it is trading above all the short-term and long-term moving averages. So let's move forward and check the Elliott Wave analysis. I have two charts with me for Elliott Wave analysis. So this is the previous chart, and yeah, so this is the chart that I have with me. First possible case where we are assuming WXY wave. So we already gave the targets of 18,300 based on Fibonacci extension, and that target has also come. So once this level was crossed by a good margin here around this point, we mentioned that any pullback will take us towards 18,300. So that has happened. So now based on this chart, we can assume that this is ABC wave as a W wave, then X wave, then again A, B, and C wave is in progress. C wave internally has 1, 2, 3, 4, and 5 wave in progress. So I was able to find out the fourth wave based on plotting Fibonacci from this point to this point. Here you can see it is nicely fitting to 0.32 Fibonacci. I could be wrong here, but this seems to be a good area where we can say that this is an expanded flat correction fourth wave, and this is wave 1 and 2 here finished. So there is a possibility that now at 0.382 Fibonacci of this whole extension of 1 and 3, 1, 3 and 4, we could face a resistance. So in next session, we could face a resistance, and this would be our confirmation point for the drop, 17,970. From here, we could see a pullback towards 18,100. So if the drop will start, we'll have to wait for one swing to complete, then a pullback will be given. So this pullback around 18,100 will give us the opportunity. Not exact, the levels cannot be exact. I'm telling based on the most probable resistance and support zones. So probably it will head towards 18,100, and then it could start the dip. So one can look for resistance near 18,100 after the drop and a confirmation of this, or one can also wait for a break of this to consider the downside has started towards 17,400, because this is one of the key supports. So price is likely retrace towards this, and the volatility could increase once we start the dip. So these are based on our bearish view, and we don't have chart for bullish views, and because the Nifty has already reached towards the new high, so it's better to look for the top rather than going fresh longs. And I want to wait for a break of 18,600, and I would start accumulating some stocks if it breaks that, and I would considering a pullback again to consider a long towards again higher upside. Until that, I don't consider a bullish view. So this was the first chart. I do had a second chart, and this is the second chart where we are assuming it's to be a flat correction A, B, and C wave. So here you can see that wave C is extending higher and higher, and here the target is coming to be 18,480. Okay, so how this target came? Here we are assuming wave 1 to be an leading diagonal with 1, 2, 3, 4, and 5 wave, and wave 2 finished here as an expanded flat correction, and wave 3 and finish at this point, and fourth finished as a zigzag. So this follows an alteration. It also retraced to 0.32 Fibonacci. So 17,962 was the low of 0.32 Fibonacci, and Nifty made a low of 17,970. So this fits well, and fifth wave could be in progress. Internal wave of fifth wave is not good to be shown on the chart. It's not that clear, you could say, and it could make one more top somewhere near 18,400 to 500 zones, and there we could look for the dip. So again, as I said, 17,970 break is the key level for us to consider the drop, and it could be possible that in one day itself it could crash 400 to 500 points, accelerating the VIX. So that will be a scary statement, but that's what happens at the end of the rally, right? So that's the possible case. So be prepared, and yeah, this is not to scare you. Analysis could go wrong. You have to take care, and consider your risk size, and you have to plan your trades or investments based on your own analysis. So 10 minutes are over. I'm going to finish now the option chain. Hope this chart is clear. I try to make as simple as possible. So I'll go for the option chain now. On the option chain, obviously 18,000 is now major resistance with 77 lakh put open interest. Okay, this is the major resistance, and major support, and major resistance will be at 19,000. Right now it shows as 19,000 as a resistance, and the second major resistance here is at it should be at 18,500. So this is the second major resistance. What is the second major support here? 18,300 is the second major support. So currently for this expiry, this is the very short range, 18,300 to 18,500. So this is the range that we can expect. So next couple of sessions, if again we break 18,300, we will jump right towards 18,000. We need to break this by good margin. Let's say 18,250. If broken based on option chain, we can consider that 18,000 is coming. So again, 18,500 break could take us towards next resistance at 18,700 or 800, and then subsequently towards 19,000. So this is what the option chain tells us, but this is for next expiry of 17th November. So it will be very very hasty, or you could say very optimum target to consider 18,500 a break, and then 19,000 would come. Okay, so there are only 4 days left, so that so these will be very big targets. So I'm not saying that it's not possible, but there is a chance that most likely it won't break 18,500. Let's see what happens in the next week. So hope you understand what are the levels, and do subscribe to the channel if you haven't already. Do hit the like button. Thanks for watching. Bye bye.